All right, everyone, let's talk trading plan. Thanks for going through all the goal setting stuff with me. I hope it really helps you, and I really want you to do it. And after you've done that, you can now take it to the next step and start applying it to your trading, making sure that you're completely on top of that. So the first part is the trading plan. All right, so welcome to the, my trading plan template that I've built for you guys. This is going to help you consolidate your trading plan, make sure you know what questions to ask yourself, and how to fully build this out. And then what you're going to do is you're going to add that into your Asana, and you're going to add the link to the Google Doc. So make a copy of this first and then edit it. The link to the Google Doc so that you have it will be underneath this video somewhere in the courses. So you can download it, copy it to your drive, fill it out for yourself, add it to your Asana, and you'll have it there to refer to at all times. So let's just start and let's just go through this. All right, so the first part is what individual cryptocurrencies are you going to trade? The key here is focus and to keep it simple. It can be as arbitrary as writing a list of your top 5 favorite cryptos or selecting a group of assets by market cap or any other distinguishing features. So you could take, I'm only going to trade low caps, or I'm only going to trade Monero, Litecoin, and Bitcoin. It's up to you how you split it, but you need to split it and then you need to stick to that split. Remember, the more assets that you trade, the more you split your focus. And this will have negative implications on your bottom line, I promise. I suggest focusing on no more than 15 assets and having a maximum of 5 to 10 open trades at any one time. Ideally, that number would be even lower, as low as 1 or 2. But if they're long term, you can stack them up a little bit more than that. Then you need to decide on what is your average holding time and your trading style. So I'm going to link this article and this quiz underneath this as well. So if you have no idea or you're new to trading, first read this article, which explains the 4 main trading styles, and I'll link to that. So then you'll get an understanding. I thought it'd be quicker me linking to an article than going through the styles here. That will take a while. And then you can take this quiz, which I'll link to as well, on Baby Pips. The quiz is a simple personality test that pairs your personality with a trading style. It doesn't matter what your answer is. You should still align your available time to trade with the relevant trading style. But this is a really good start and should give you a bit of an idea of what your personality type is most suited to. Just don't take it for gospel. Always be open to new ideas and experiences, because trading is not one size fits all, and just because this little quiz tells you should trade a certain way doesn't mean you should. The reason I am linking to it is a lot of people have actually sing the praises of it in a way they think it's quite accurate. For me, it actually it summed it up as well. It said I was a position trader, which I literally am. So I thought I did this late on rather than early on, and it was accurate for me. So it might be accurate for you as well. Now, holding time and trading style is important because it forces you to decide on a way of thinking, a frame for your trading. Trading is impossible without context, and this is the context that is going to dictate a lot of the mindset you have at the beginning of a trade and the way you're going to manage your trades in general. This doesn't mean that you can't be a scalper and an investor as well. It just means that you need to completely separate the two actions, both mentally and physically. So if you're someone that wants to trade all day, making small profits, that's fine, but maybe you do want to have some long-term investments as well. Just make sure your rules and everything we talked about earlier are completely split, because you really want to have one style and focus on that. And if you're going to have two, firstly, you need to focus on one more than the other. And secondly, you need to split everything up, because there'll be completely different strategies, different rules, different everything. Cool. So after you've chosen your style, hopefully just one style, add your chosen indicators. Add your chosen indicators to your chart and save them as a preset so that you can look at the same indicators on every single chart. This is the new window frame that you're looking out at the world on, at your charts with. Traders have success with a variety of indicators. What is important here is not having the best indicators, because there's no such thing. The important thing is sticking to your decision. Commit to keeping these same indicators for a minimum of 3 months without changing them, modifying them, or adding new indicators. So think about this a lot and think about this in depth. And then when you make a decision, stick to it. I know people that trade with pretty much every indicator under the sun, as well as no indicators and trading price action. And it doesn't seem to matter what they choose. The most important thing is they pick that one style and then they pick their one indicators and style of that, and they stick to that. They stick to that forever. It will make slight changes occasionally. But if one day you're trading Bollinger Bands and then you're trading SMAs and then you're trading RSI and then you're trading price action, you're going to fail. You're going to get stuck in this loop of going to the hot thing, the new thing, the thing that you think will solve all your problems, and it just won't. You need to pick one style and one set of indicators and trade that only. Next, tilt rules. All great traders, or all great traders that I know, have rules that stop them from going completely bust. These rules need to accomplish two things. When you're trading badly, your position size needs to be lowered. So you need to set rules around how much you're going to cut your position size after how many losing trades you have. And secondly, when you're trading badly for a set period of time, you halt trading completely for a set period of time. So if you've been trading badly for a week, maybe you just need 1 week off. If you have a bad month, maybe you need 1 week off. If you have 2 bad months in a row, maybe you need a whole month off. These are really important, and a lot of people come to trading expecting get rich quick. It's not. It's get rich slow, and then it's keep that rich, right? It's long term. That's the way I think about it, and that's the way you need to think about it as well. People do just have a month off trading. Professional traders will have a whole month off to completely reframe things and come back better so that they can continue to win. It's the traders that don't have any tilt rules, that trade emotionally, don't manage position size, don't manage risk. They just don't last. Like, lasting as a trader for a long period of time means that these things are just absolutely critical. Next, we've got trading schedule. Write down the times that you will be trading. For instance, start with a 1 hour trading session each week. That's a great way to start. And then you can build on this or even lower it depending on your style and your objectives. So your schedule is going to be defined by your style and your availability, but keep it consistent and build on it up or build on it down depending on what's working for you, what you're having success with, or what you want in the end. Now, I separated out the 3 keys here into 3 completely different points, so I can go into them in a little bit more depth as well. So the 3 keys. Number 1, write down your list of rules for taking a trade. Now, this isn't new. This is something we talked about before, and let's dive into it here. I recommend deciding on 1 to 5 entry rules. This can be chart patterns, divergences, indicator values, price movements, candlestick patterns, and any combination of the above. An example entry would be entry 1, when price closes above the 50 point moving average on the daily chart, take an entry. Now, I strongly recommend starting with no more than 5 of these entries. And they're going to work off the indicators that you've already chosen for your charts. So first you pick your indicators, then you pick what values and what combinations you're going to actually trade, and then you narrow that down. You might start with a list of 20, but should not start trading until you have a very small number of entry rules. I suggest no more than 5, and ideally this number can be 1. Really, there's a lot of traders that only trade 1 pattern, and they get good at it. So here are some of the main factors to consider. Define the appropriate market environment. Are you trading in trends or sideways markets? And then how do you define a trend? How do you define a range? And which situation is ideal for your strategy? You want to define your setups and your entry rules. That's what we just covered. And then you want to define how to deploy your trade amount. Do you have it entered all at once? Or are you going to scale in as the position moves in your favor? Or are you going to set your main entry point and buy little pieces as it falls into your entry point and then cut it at a certain level, or buy at once and then add to that position as it moves up? These are all things that need to be considered. And you want to define your trade management criteria. When are you going to hold? When are you going to sell? when are you going to cut losses, when are you going to add to the positions. The objective here is to ride winners and cut losers as soon as possible. You will need to experiment. And it all ties in together. Everything we've done in Asana, everything in the rules, it all ties in. So when these questions are answered, you can get your checklist and your strategies and keep it consistent, and then really start improving by doing the same thing over and over again. Now, you want to write down your list of rules for exiting a trade. Divide this into two categories: rules for taking profits and rules for minimizing risk. For example, I will close any position that moves against me by more than 5%, or I will always take 50% of my trade off when price reaches the first resistance level. These rules can become quite complex, and they should tie into your position sizing rules as well. Next, write down your position sizing rules. Before you take any trade, you should have a specific set of rules that you can consult to identify how much you're going to risk on any given trade. Now, this could be completely simple. The generic, never risk more than 2% of my total account in any one trade, which means your stop loss must be set an appropriate level so that 2% of your account is never, more than that is never lost. But you can actually take this to another level, and this second one is closer to what I do. So it could be more complex. So for example, maximum position percentage risk is equal to entry probability score. So that basically means the better your entry, the better you think it's going to be, the larger your risk. So where your entry probability score is a subjective score that you give to every trade between 1 and 5 based on your confidence and your history of success with that entry. This means that you'll only be betting big on trades that you're extremely confident in and betting small on trades that you're not as confident in. And that's a really good rule to put in place. And eventually, you're going to stop taking the 1s, the 2s, the 3s. You're only going to take the 5s. And then when you start only taking your 5s, like your really good trades, move that down again so you're still not losing much more than 2%. Because if you're only taking 5s, you should not be risking 5% on every trade. You can risk 5% on a trade rarely, right? On a trade that you really are confident in. But if you're taking, like when this evolves and evolves and evolves, and you're only taking your high quality trades, 5 should be 2, and then you'll have 1 and 2. You'll have your best entries and your second best entries, and it'll be 1 and 2% accordingly. So that's how it will look in the future. All right, so I think that's covered everything with the trading plan here. This will all be attached to the lesson, so you can take it and then just simply delete the text and fill it out for yourself. Copy the link, put it in your Asana, and congratulations, you have a trading plan. All right, now the next thing we're going to move on to here is the trading journal.